Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, the markets are relentless, guys. They're continuing to push up higher. Really quite puzzling, right? When you think about it. We've got the jobs report tomorrow at 8:30 in the morning. We've got AVGO reporting after hours this afternoon, but mainly the jobs report, right? So think about the jobs report. If the jobs report comes in weaker than expected, are the markets going to then be happy and rejoice because the Fed is more likely to cut rates? And if the jobs come in better than expected, is the market going to rejoice because the economy is doing better? So it's almost like good news, bad news. It doesn't matter what it is. The markets are ripping higher. And as I speak, the S&P 500 is continuing to push up. Really wild scenario that we're in right now. Curious times. This time will come to an end, but right now it looks like all the momentum is moving forward and upward on the S&P 500. So let's jump into the market summary board and check out where everything laid out today. We've got the Dow Jones up 0.9%, NASDAQ up 0.78%, S&P 500 up 0.78%, U.S. oil retreating again just slightly, down 0.69%. Gold down slightly, 0.25%. Bitcoin did drop 1.67%. We're going to get into that chart. There could be some bullish patterns that are developing in their infancy stage, but we'll get into that here in a little bit. First up, let's check out the S&P 500 heat map. Man, a lot of green on that screen, folks. Lots and lots of green. Very little red. We see TXN. We did cover that the other day, down 4.2%. Salesforce, after reporting earnings, down 4.78%. But we have Apple up 0.56%. AVGO is up going into earnings, 1.32%. Meta, 1.56%. Amazon, nice push of 4.21%. So we have a lot of green across the screen today, as would be expected with the greens on both the NASDAQ and the S&P 500. Great push for the general market today. Into the S&P 500, the SPX. Now, guys, notice price is accelerating above this trend line. Now, if you notice too, back into the intraday time frame, check this out. So if I scroll back out, here is today. We gapped up, sold off, got into gap fill, and then never looked back. Continued pushing higher. Notice we paused right here at the top end of this parallel channel for about an hour before pushing higher, getting up here, consolidating right before this trend line, then the last 10-minute push as we're witnessing right here, pushing up through this trend line. Very bullish move, especially after the nice drop down that we had on Tuesday. We've really recovered it all, and we're right back up here in this range. Attempting to go higher. Again, pivotal report tomorrow. What almost seems like with this price action pushing higher, as I said, it doesn't matter what news comes out. It seems like it's going to be good. Interesting push now, getting price back and closing above this inclining trend line. If I flip over to the SPY, we can see that exact same trend line actually didn't have as much of a breakdown most recently. Yesterday's price action clearly traded and closed above this trend line, and then today was just a continuation move. On the SPY, we're actually right there at all-time highs again. So this is very interesting to see how quickly the markets are recovering, because we haven't had a 5% pullback really on this whole span. We've had about 3% as the max. That's not typical. Normally markets, especially after a tremendous run from April, we should have some digestion, some profit taking, some rotation into different plays. But that really hasn't happened as the S&P 500 continues to march forward. Very, very impressive on the charts. Into the Qs we go, and you can see here the Qs did accelerate also, pushing up higher from yesterday's close. Nice close on the day as well, implying we could go a little bit higher. Now into tomorrow, what I'm going to be watching is this declining trend line. Notice how we've got a pivot to pivot, and then price action is basically right there as we speak. That area, should we not gap over it, it should present resistance into tomorrow. So AVGO will play a big role in the Qs if it does gap over and push higher. Be watching this declining trend line tomorrow for most immediate near-term price action. Next up, SMH also pushed higher nicely today, getting more outside of this pattern of this head and shoulders that's displayed here on the chart. What you want to see here, if you're a bear on semiconductors, you want to see price not get really any higher than what we've had happen today, and then start to curl back over, get to this neckline right around 283.29, and then fall back down to the support of 271.62. If the SMH continues pushing up, next resistance is going to be up here at the top portion of the screen right here at 30109. Next up, the IWM. This chart really has been fantastic. I've been talking about this for a while. Ever since we really established ourselves breaking out of this longer-term declining trend line, we really pushed up higher on the IWM. Nice push. Even today, too, getting right back up into this resistance zone at 236.63. We attacked it before. Now we're right back attacking it again. It is weaker. We'll see if we can't push higher tomorrow, get above it. All-time highs not far away at 244.98. Next up, Bitcoin. Now, guys, I want to talk about this. We obviously review this every single day here at Trading the Close. And really, so far, we've really been mapping out the entire road plan here on Bitcoin. And what I found today is awfully curious. A couple things. And I want to point out first, and it's all technical analysis. This is wonderful stuff. It really does feel like magical lines on the charts. So, all right, so full screen now. So just to remind everybody, and for any new viewers, this parallel channel, we've really been talking about covering price action in Bitcoin for the entire year of this year. You can see this started back in January of 2025. I also do have this pivot high here back in December, strung over with a trend line to this pivot here on May 25th, and all the way through. We can see every time price came into it, it did react to it, right? Tried to break down, broke back up, and then since came back down. Now, zooming into where current price is. You notice we've been talking about how price retraced this whole breakout, made a full circle from this inverse head and shoulders all the way back down here. Now we've bounced up and gotten rejected right here at the 50% area, that parallel. The parallel, again, I keep these on the chart for a reason. They give me so much data and information extended all the way out. Again, this chart is now going on 9 months old as far as the parallel, and it's still giving us this accurate information of a rejection, at least for the near term here in Bitcoin. But notice what I'm seeing develop here on the chart. We've got a left shoulder, we've got a head, and then we're starting to form a right shoulder. So any Bitcoin bulls out there, you want to make sure on this pullback we don't get beneath the head. If we keep price above the head and then start curling back over to attack this declining neckline, this could produce a move upwards of $117,000 on Bitcoin. That would put price right up here near these pivot points. There will be stopping points along the way. This trend line, primarily one, will provide resistance should we start breaking up. Again, this is a few steps ahead of time, but at least this pattern is starting to develop. And if you're a bull, again, watch price action so that it doesn't get underneath this potential head of the inverse head and shoulders pattern. Next up, we've got gold. Gold put in a little bit of selling today, but really ended up closing the day in line with yesterday's price action. You can see we were actually looking like we were going to start curling over earlier on with gold, but has since recovered right back up here to close the day at 35.50. We'll see if we get any bullish consolidation. We do have a measured move potential on gold up here to 36.21 cents. If we do have any selling pressure coming back, this is going to be the first area of support right here at 34.38, which is a trend line that was generated from these pivots seen right here on the chart in this bull flag pattern. Next up, we've got silver. Silver did retreat a little bit more than gold. As you see, it's not recovered as much. Ultimately, though, still great breakout there for silver. Next resistance, 41.66. Minor support's going to be down here at $40.07. Next up, U.S. oil. Still, I'm remaining bearish on oil, and you can see here price did retreat back over. Over here, there was a slight glimmer back on Tuesday the 2nd for price action on U.S. oil to continue up to this declining trend line. Last two trading days have rejected that price action, brought us right back down all amongst this consolidation. So be watching U.S. oil in the coming days. This is the first area of minor support, $61.90. Still have a target of U.S. oil under $60, and that would put pressure on a lot of oil companies here in the U.S. as maintaining above $60 keeps them profitable and in operation. Next up, nat gas. Nat gas we see here really chopped sideways from yesterday's price action, putting in a doji candle. Still think nat gas with this bounce has the potential to reach up here at $3.30. And that will be the area of near-term resistance on the charts. Near-term support right here at this horizontal trend line at $3.02. Now, the 10-year yield did have a big move today, guys. Been talking about this parallel channel, and also this parallel channel, too, has been in here longer than a year. This goes back all the way to October of 2022. Price action, or at least the 10-year yield, has been contained in that for the most part. As you see, we've had small deviations here, but then today, Boom, we're moving straight down. This now has triggered this bear flag pattern. Looks like the 10-year yield is going to be marching down to 4.095%. Keep in mind, whenever we do break inclining trend lines, such as this with the bottom end of the parallel, action usually can retrace up to this area before falling further. So there's two possibilities there. But now that this bear flag is triggered, it does point towards a target down here at 4.095%, even if we get a bounce up and retrace to that top end with a parallel right there. Next up, we've got some the biggest mover in the S&P 500 today, HIMSS. And you can see today, nice accelerated move, elevating itself up above this 47.89 area, now closing the day at $48.11. Great move in the near term on HIMSS. But if you notice, I've got a few trend lines drawn on the chart. We have a price that pierced and tried to break through. It never completed and never pushed up high enough, ultimately forming a near-term topping tail on the daily chart, pushing price all the way back down, breaking underneath this inclining trend line. What happens when price breaks significant inclining trend lines? Well, price likes to retrace to that trend line. And if it does so, we'll be marching up near $58.74. Great move on HIMSS to accomplish beating this first level of resistance. Next major test for it's going to come right here at $52.20. Be watching that for the upside. Any bulls on HIMSS? That's where you're going to be watching to see if we can't push higher and attack this inclining trend line. To the downside, this is beautiful area of support. It's only been tagged twice, once here and then once here on September 2nd. This trend line value roughly at $42.58 would be a great buying opportunity for anybody that's not already in HIMSS for a technical bounce up play there. Next up, SMCI. Now, we did take a number of different requests from the viewers. Thank you guys so much. Thanks for the participation in the comments. It really helps build our community, helping the viewers like you get some great insight on your favorite stocks. Now, this stock was recommended to me by one of the viewers, but I tell you what, this used to be my favorite stock to day trade. There was so much volatility in this stock. I could almost guarantee at least a day trade once or twice a week on SMCI, but I've refrained from doing so most recently because SMCI really has been in a cloud. They've had a lot of accounting issues towards the end of last year, and then some more issues surfaced about potential sales of their chips to China through other importers and exporters in other countries. And so it's kind of been in this gray, cloudy area where a lot of investors aren't really eager to get back into SMCI. And the result is this declining price action breaking underneath the inclining parallel channel. If you notice here, I've got a longer term trend line that's strung out. We've hit it now once, twice, 3 times. This would be the fourth area of hit, which is about a 50-50 for a breakthrough. So if you're aggressive, you could buy SMCI right here at 38.96. If you're more conservative, wait for that area to break and pierce, start picking up at 36.04, and then understand in your mind if you do want to enter this play and some of these unfortunate stories come to be true with SMCI, we could have price action sell off a little bit further down here to 27.78. In essence, coming down here to these pivots. So if you're an investor, you've got to plan and strategize this with multiple entries or tight stop losses. Depending upon your outlook and your time horizon, you can attack this in several different ways with these support levels that are given to you here on the chart. As with what we've said with many times with these trend lines, they like to break and then retrace. And we see that all over the charts. Draw in a correct parallel channel. What happened here? We broke down and then we retraced to that parallel channel. Look, we broke down again. We retraced to that parallel channel. Look, we broke down again, retraced to that parallel channel. I'm going to keep saying it until you guys understand and realize this is just all repetitive over and over and over again. When you learn to draw trend lines, when you learn to draw parallels and understand the data that it gives you when they break, you can make a lot of money, but you've got to study the charts. It's all in the charts. It's not in the hype in the news. It's all in the technical analysis that we do right here on Trading the Close and in Verified Investing. All right, next up, Salesforce. So Salesforce, it looks like we got a lot of Star Wars going on in this chart, but I wanted to do this and show you guys some head and shoulders patterns that were telling us CRM was going to be going down a long time ago. And when I'm talking about a long time ago, these started back at the end of 2024 with the formation of the left shoulder, the head going into December of last year. And then look at this little baby right shoulder. That's the bigger yellow head and shoulders pattern you see on the chart. And the most recent that you see here, we had another head and shoulders pattern, even when price broke here. And again, guys, notice when price broke this neckline, what happened? Came down, retraced. All right, guys, I'm getting off that broken record, but that's just what happens in charts. So don't get FOMO, don't get too emotional. Analyze charts so that you can position yourself in the right place, even if the trade goes against you. Understand you still can maneuver and find your way to profits. All right. So we have so we basically have two head and shoulders patterns that were telling us price was going to continue moving lower on CRM. All right. So let's zoom back out on the charts. So we have a blue, which is a smaller head and shoulders pattern here, measured move target of 213.65. The yellow head and shoulders pattern is all the way down here at $160.54. Now notice though, we've got an inclining trend line back here from December of 2022 connected with the most recent pivot. So this area will be support should CRM start and continue selling off in the near future. That area supports right around $230. But should that trend line break, then I think the measured moves are really highly probable of being tagged, especially this blue one here at 213.65. This is a very long move, so we're going to have some pretty bad news, mainly the S&P 500 starting to curl over and put in more of a 5 to 10% correction for CRM to get anywhere close to this yellow measured move target. But nonetheless, it's still there because this is what's displayed on the charts. It's given us insight as to what potentially could happen here on Salesforce. Next up, Microsoft. Now, Microsoft, as we've known, has had really a liftoff experience since the earnings report back here in April. Gapped up, moved higher. We did the same scenario here in July, but it was more a gap and sell, right? Look, it was a gap, sell right back down to this longer-term trend line. And to see where these are coming from, I'm flipping over to the monthly chart. I'm bringing this trend line all the way back from the dot-com bubble situation. That's the one where price action is currently above. The most recent trend line that price did consolidate on before falling down is from November of 2021. So we come back to the daily chart. This is the trend line from 2021 that has broken. And then here's the trend line from the dot-com bubble. So we have this as the next area of support right under $500 at $488.06. Followed by $474.98. Consider that this 500 level will be fairly difficult to break through. As you see, we've come down, kissed it right here, pierced it here. It's a psychological number. It's a very big number for basically human psychology, right? When you think about it, a lot of people will either have their buy levels here or they'll have their sell levels there when the price is coming up to it. So it makes sense, especially with Microsoft up here at 555, that when buyers missed their chance to get into Microsoft and now it's bet down at $500, there's going to be a lot of buyers here. So watch the 500, even if we come back into it to watch price action, likely will pop or pause at that area before coming down to the next level of support at 487. Next up, we've got Newmont Mining. Newmont Mining we have displayed on the weekly time frame, and you can see here we're getting pretty close to pushing to the all-time highs over here at $86.37. Displayed on the screen right here is one of the resistance levels. Now on the weekly time frame, we are putting in a doji candle as of now. Now tomorrow is the close of the week, so we'll see if that remains. Doji candles typically represent indecision. We have equal amounts of buyers and we have equal amounts of sellers on this week's candle of Newmont Mining. So that could lead to a change in the current direction, which the current direction is up. And if we notice, it's not just up, it's extremely up on Newmont Mining. So a pullback is in order for Newmont to continue marching higher. First area of support that I'm targeting is 67.16, followed by this inclining trend line connecting pivot to pivot and pause price action for several weeks before breaking out. That area is $60.87. And I guess, guys, I might have lied, because what happens when price breaks out of trend lines? It likes to retrace. All right. I'm repeating it again. So just right down here, 61.05 will be a great area for support should Newmont retreat back into that zone. But great move on Newmont, obviously, on the back of gold pushing up to new all-time highs as well. Very nicely done on Newmont. Next up, we've got Circle. Now, Circle here, I got the RSI displayed down here at the bottom of the screen. This is a fairly new stock. And so whenever you're doing technical analysis on like an IPO or a newer stock such as this, it's only been around a few months, you don't really have a lot of data to go off of. If you notice, all the patterns that I present to everyone, they extend back several years, much like what we looked at on Microsoft. back 25 years ago, guys. So that data, that information can guide us to where price is going to go in the future. Since we don't have too much to go off of, there's really not very solid technical analysis advice to provide, except for what's being displayed on this chart, which are the Fibonacci retrace sequences. So I have both these levels, support at 114.29, followed by $90.59. Those are the two fib levels left from this massive move up from the first initiation on June 5th. Besides these levels of support, it would be a double bottom right here, double bottom at $64. Now, if you're an investor, again, with a proper time horizon, you could start buying right here, 114.29, buy again here at $90.59. Because notice this daily RSI is getting down here now under 35. When we get at 30, that's oversold in the near term. And it doesn't take really an advanced trader to recognize we have retreated quite well on Circle, being that we were over $250 here in July 18th, and now we're down here at $117, a nice 50% haircut. You know what? If you're an investor, I don't blame you. Start dibbling here in Circle. This is involved with stable coins, Circle is, and there is a lot of interest in stable coins now. And where that will take us in the future, who knows? But the great thing about a lot of stable coins, they do provide a return on investment. One with Coinbase, USDC, provides a nice 4 to 5% APY, which isn't bad if you're sitting idle, waiting for levels to get hit and purchasing different cryptocurrencies. Next up, we've got General Mills. General Mills, you can see here, I've got on the monthly time frame, and I've done so to show a couple different things. Now, this is a dividend-paying stock. This is one of those stocks that you would be interested in getting in for the long haul, where you buy at support levels that are significant and then hold these for the long haul because you'll get paid off. And then also, if you buy at great levels of support and the price bounces up, you're not only getting paid by a dividend, but you're also reaping profits from the price action moving higher on that stock. So it's a great play, but these you really need to time your entry correctly. One, especially after a massive fall down that we've seen. So this right here displayed, we've got an inclining trend line that is a head and shoulders pattern. Ultimately, that could bring price on General Mills all the way down to $30.26. So keep that in mind if you're wanting to inch into General Mills. Now, in the near term, we're starting to have some bearish consolidation right above the support level at $48.08. If this continues, that could blow past this support level, which takes us into the next one, which is a long-term trend line back from March of 2009, strung over here to the pivot low on December of 2018, and that area will be at $45.77 on the chart. So almost $4 lower on the charts. We will hit this significant long-term trend line. Now, this trend line can pierce, which is why the support at 42.63 is displayed. We should have a great bounce potentially, and I guess I'm lying again, potentially all the way back up to retrace what was just broken down from. You can see this was the neckline of that head and shoulders pattern. Now, this is the monthly chart, so please understand we did retrace already, but ultimately, once General Mills starts pushing higher again, that's going to be the target, and that area is going to be resistance up here, roughly $64 to $65 whenever price gets in there at the appropriate time. Lastly, we've got UPS, another dividend-paying stock. Look at the collapse on UPS ever since the beginning of 2022. UPS has nearly just gone straight down on the monthly chart. Nasty sell that we're seeing here, even breaking this inclining trend line. Price, as we know, is already retraced to that trend line. However, it has now sold off even sharper, creating some more bearish consolidation, implying more downside. Next support, $80.06. Be watching that for a bounce to reattack this trend line here that's roughly at 105.39. Again, a dividend paying stock. Look, if we go back out on the monthly chart, we can see we're really towards the lower parts of this. This could be one of those stocks you tuck away in your portfolio. Even if the price goes down to $60, guys, we're still going to be ordering stuff getting delivered to our house. It's just too convenient. I don't see any time in the future where something like this is going to go away. So in the near term, any sort of sell-offs on UPS could be great buying opportunities for that long-term investor. All right, guys, thanks so much for tuning in. My name's Drew Dosek. We'll be back here doing Trading the Close on Monday. Until then, you guys have a fantastic weekend. Stay safe, and I'll see you on the charts.